So, Matt, we're looking ahead to PC. We're going to be talking about it more later in the show. I want to ask you, what's really at stake here? We've heard from the Fed officials. They're really focused on the labor market, and they seem to have a lot of confidence that inflation is moderating. So in your mind, what's at stake when it comes to this PCE report today?
Well, it could be, create some problems if it does come in a little bit stronger than expected, especially now we're starting to see some of these commodity prices move up. Of course, that's a little bit been much more recent than that report will probably cover. But we also have to realize, the stock, people are getting worried about what's going on in the bond market, where, where yields have actually backed up. I mean, a lot of that, I believe, has to do with really more technical issues. I mean, we had the long-term, the 10-year note went from 4.8% to 3.6% since April. So it had been spending months pricing in that rate cut. And so when we got it, I think it was more of a sell the news reaction rather than something to be overly concerned about. So, we'll see what happens today, but it could throw a little bit of a wrench in the works. But I think this situation is pretty good right now.
Very briefly, I want to go back to that commodity move you were talking about. A lot of commodities moving to the upside. Oil actually the exception when it comes to this based on that China stimulus. Are you worried about the impact of that commodity rise on earnings and earnings estimates going forward? I mean, next year, 15% earnings estimates. We continue to see commodity prices move higher based on China kind of reaccelerating. Are you worried about that and maybe that impact in the market?
I am, Frank. I mean, the thing about earnings is so important. I mean, remember, in 2023, the stock market went up 25%. On zero earnings growth. So we basically pulled forward this year's 11% earnings and next year's 15% earnings last year. And so we actually need better than 50. As good as 15% earnings growth sounds, we need actually better than that because the market's trading at 22 times earnings. If that's going to be tougher to achieve with these higher commodity prices, that creates problems. So if these things hold true and hold steady, I mean, I think commodities are getting a little overbought, but that's only on a near-term basis. If they hold up as we move into next year, that's going to create some problems and some headwinds for the stock market.
I'll stay with this China theme very quickly. David Tepper coming out saying the valuations in China when it comes to equities, especially mega cap tech, are very attractive. I'm just looking at the FXI up, I believe, double digits this week. Are you seeing opportunities when it comes to large cap stocks and mega cap tech in China?
Yeah, yes. Now, the one thing we do have to worry about is that it has, it's up 15% in a week. So be careful about chasing this market up at up at these levels. I think people want to be, especially going into the weekend, be careful about chasing them. And so, and even David Tepper said yesterday, I saw the interview, that, he'll be looking for, pullbacks as a good buying opportunity. So I'd look at that. But I mean, the one thing is that on a very long-term basis, China still has structural problems that a lot of this liquidity is not going to, or these stimulus is not going to solve. But boy, we learned in 2020 what massive stimulus can do. I mean, obviously during the pandemic.
Right. Matt, one last question. I hate to cut you off there. One last question. We're almost out of time. You're really focused on small caps. So since the rate cut, they moved sideways. I'm looking at the chart right here. Less than half the S&P year to date. But you say if they hit a new 52-week high or they surpass that, that's really important for market sentiment. Why? I mean, it just seems like the market moves higher without the participation of the small caps.
Well, because one of the things is the tech stocks now, they got a very nice boost yesterday from Micron's earnings. But we need, we're starting to see the rally broaden out. And again, when we're trading at 22 times earnings, the overall market is expensive, as are a lot of these big cap tech names. So we need something else to really take the baton. And so keep a close eye on the bank stocks because they're very heavily weighted in that area.